Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month lead and tin.
LME 3-month lead. In mid-September, the market started to move lower that eventually led to a September to October base bear channel, highlighted in dark blue on my daily chart. However, at the low point of the move down 3 weeks ago, at the January 2020 high at 2039, prices turned back up again with a combined daily key reversal up and bullish engulfing pattern. 3 weeks ago, I said, and I quote, the action since mid-September to date could be a bear channel. However, it's early days on this idea of a bear channel, which is why I've not highlighted it, but that doesn't take away from the pattern being there, end of quote. Well, as you can see, we now have this bear channel fully formed. I further added at the time, and I quote, only if we see the market stabilize at this January 2020 high at 2039, as it did back in early July, only then can we see the prices possibly using this bear channel to move or even vault into the next pattern, end of quote. Prices did indeed stabilize there and rode back up to the top of the bear channel, and 2 weeks ago up through it to test, amongst many resistances, the flatlining long moving average overhead, currently at 21.22, the 50% Fibonacci line of the March 20 to March 2022 move at 21.35, and even the very slowly rising medium moving average, currently 21.40. In last week's commentary, it looked like the market had stalled, but last Friday's bullish open and close white Mariposa punched up and closed over the medium moving average, and even over the flatlining short medium moving average, currently at 21.59. Then yesterday, prices utilized the short medium moving average as a base for a move up and a close over the next resistances at the 21.86 level congestion and the lower trendline extension of the May to June descending triangle, June 2021 descending triangle, and that's currently at 21.91, though ending up closing right on the 21.86 congestion. It is at this point that I draw your attention to my commentary from last week when I said about the bear channel, and I quote, this now gives me the opportunity for pointing out potential targets topside for a break of such a pattern. Thus, we have a primary target X in the 21.85 area with a secondary harder to reach target X1 in the 22.70 area. End of quote. As you can see from yesterday's action, let me just get this right. As you can see from yesterday's action, prices reached the primary target at 21.85, though the market has slipped a bit today, but it is still above the short medium moving average. The one outstanding question left is whether this breach, now a proper break of the upper trend line, does it indicate a possible new pattern in the offing? Well, it's only by stepping back today that I can see or say that the October action was actually a V bottom with an extension. This is a typical bullish reversal pattern, and this is what has happened here. I am curious now to see if the market has more legs on it for the upside, or was the primary target enough? The next overhead resistances of note are a pair of 50% Fibonacci lines. One at 22.21 is from the June to October 2018 move, and the other at 22.25 is from the whole of the 2022's move. Look at these and watch out, just in case. LME 3-month tin. In mid-August, the market punched down through the lower tine of the late October 2022 to mid-March 2023 bullish shift pitchfork, as well as all the moving averages. Interestingly, these moving averages had slowed earlier attempts lower, such that we even seemed to form a possible halfway hesitation with the action from late July until the start of October. It even looked at the start of October that we might have a decent second leg to the halfway hesitation lower, but prices ran into two significant supports that stopped the decline. The first support is an obvious one. It is a series of congestion bands seen below, specifically between 23.850 and 24.155, and then between 22.895 and 23.555. I've spoken about these numerous times before, so they should be familiar. The second support was a newer, less obvious one, but one that still needed to be considered, even if it is not a perfect example of one. It is a June to October potential head and shoulders pattern, with specifically the neckline, which is highlighted on my daily chart in bright red, currently at 23,160. As I've already said, this is by no means a great looking pattern, with the second shoulder having quite an extension on it, but it is still worth considering. These two supports caused the turnaround back up at the start of October. That caused a cautious move higher, up through the resistances from the 50% Fibonacci line of the October 2022 to March 2023 move up at 25,020, then the 2013 high at 25,250, and finally stopping and turning back down at the declining short medium moving average overhead, currently at 25,235. The decline from there over the last 3 and a bit weeks has also been cautious, though it ended up last week just where it had been before, the two congestions between 23,850 to 24,155, and then between 22,895 to 23,555, as well as the bright red neckline of the extended head and shoulders top. As one might expect, all these supports turned the market back up, though I note how late yesterday and today the market is having trouble in approaching the overhead 50% Fibonacci line of the October 2022 to February 2023 move at 25,020. Last week I voiced a controversial point. It was to regard this market as still being caught, at least right now, between the damaged but still working significant resistances overhead and the significant supports below. I'll stay with that idea for now.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.